Thank you. Good morning, everyone. Yes, this is partly a little story, really. I mean, it's a story about the two silos. Richard mentioned in the first presentation that, you know, there's an ACH silo and there's a card silo, and they never talk to one another and they don't cross-fertilize. So it's partly to do with that, but it's also a presentation about trust and the way consumers may see instant payments as they progress. And let's face it, in this country, we've probably got more experience of instant payments because we were first to faster payments. So we've got some interesting, let's say, interesting evidence as to what happens when you start to increase ACH type transfers. So what I'm going to cover, just a little bit of background, some definitions about credit transfers, what doesn't work, how the credit transfer compares with cards, and then some ideas about increasing and improving the redress mechanisms that we've got associated with the credit transfer. And my proposition to you is that really the SCT, that's a SEPA credit transfer, and the domestic credit transfer, if they're different, they're not really fit for purpose as an instant retail payment instrument, and that there's a need for some really radical rethink if consumer trust is to be maintained. So it's quite a, let's say, it's a large proposition I'm putting to you, because if we look at the trends across Europe, and now we hear that direct debits are basically going to be push-type payments as well, in this country at least. We're moving towards a world in which instant payments might eventually become the dominant method of payment. But have we really thought through about what you and I as consumers want from the wrapper that surrounds those simple basic payments? There's an old German saying, you know, everyone's got different views about consumer redress, but not much is being said about the instant credit transfer. And, you know, the German saying is, if you mention money, the whole world's silent. Well, I've found when I get up and ask the ECB or the European Commission, well, what are you doing about consumer redress? Silence, absolute silence. More particularly so in mainland Europe than it is in this country. But it's certainly, to me, pretty evident that the regulators and some of the payment sector stakeholders, they really haven't looked properly at the deficiencies of the credit transfer and really thought through the consequences of instant payments and the initiatives associated with the PSD2, as we call it. So, the instant credit transfer, and I think this more or less is exactly a list of the benefits of the instant credit transfer that Richard put up. It's simple, it's low cost, it's understood, it's immediate account update, and we can't quite do that always in our credit card world. One-touch purchases, lower cost than cards, faster merchant settlement, and it will enable particularly, you know, the channels of, you know, P2P, mobile and e-commerce. So the propositions, it's a pretty good one, but it sounds good, but where's redress fitting in amongst all of this? Now, I'm old enough to have been around. I got into payments in the early 70s, so I suppose I've seen quite a few things happening over that period. And if we look back at the credit transfer, you know, why was it introduced? You know, at that time, people got paid in cash or by check in the sort of the 60s. You know, it provided certainty of settlement. It was very important, that sort of finality of settlement for business payments. Multiple parties through ACHs, so we could had a clearing operation, and it was, you know, it's been low cost. But if you think about it, it hasn't changed in 50 or 60 years. It's the same basic product that was introduced at a time when payments were pretty crude. And obviously we've changed the way we do it, but the principle behind it remains the same. Now, if you look at cards over that period, you know, over the same time period, We introduced in the 60s the concept of the card, country club billing, grace periods, floor limits, voice authorizations. In the 70s, we went into instant credit, repayment options, electronic authorizations. In the 80s, ATMs and FPOS, and then loads and loads of subsequent development and we're all very familiar with all of those. So the card business has not stood still. Unlike the ACH business, it's actually developed and invested. Now, some will say it had a revenue stream to enable that, but I think it's very important when we're making the comparisons. And I'd say that ACH silo, it's no wonder the cards business doesn't talk to them, because they've got nothing to tell you. They've got nothing to say, really, about developing products. It should be the other way around, but it doesn't happen. So let's just talk a little bit about what, in a European context, what the redress processes are at the moment. There's an EPC initiative coming in in 2018 for a request for recall on the credit transfer, and provided the payee is happy with it, you can get your money back. So one of the deficiencies of the credit transfer for those mistaken transfers, it should be enabled. And then on the direct debit, this is the European position, there's an 8-week no questions asked refund, and then 13 months after the debit transaction. Here in the UK, it's unlimited, it's an open. I think that's about all I would say that we've got in place for redress in the very general sense across Europe and in this country. Now let's have some, where are we? Let's move to the next slide and look at some rather disturbing information. Recently, last week, the UK Finance announced that in the first 6 months of 2017, there were almost 20,000 scams on the credit transfer, costing 110 million. Consumers lost on average 3,200, and poor old business 23,000. And here are just some headlines about the sorts of things that all of us know. I'd never use a credit transfer online. It's just too dangerous. It's far too dangerous. But just look at some of these headings. Bank refuses to refund bankrupt kitchen company deposit because payment was made with a credit transfer. Online electronic company scammer falsely claims declined card, requests credit transfer, washing machine not delivered. A couple of examples where people step outside the framework of some of these marketplace operators, like Airbnb. If you step outside them, then that's an invalid transfer. If you make a credit transfer, hard luck. And similarly, in eBay, fund protection can be bypassed. House purchase intercepts defrauds a couple of 100,000 on a deposit on a property. So I think all of these are really worrying. I mean, they're really worrying events. We're going to have 40,000 problems by the end of this year, perhaps 220 million. And what is worse is that the Consumer Association, that's the UK operation, say that only 4 in 10 of these scams do people get redress. And in fact, the latest UK finance figures show that it's only about 25% of people they only paid out 28 million to the victims of these scams. Now, you may say, well, okay, it's the British market, but we're the first to move into faster payments, and now we're altering the way in which our direct debit operation changes to make that closer to a credit transfer operation as well. Just talk a little bit more about these authorized push payment scams. The PSR had a reference to it by the Consumers Association, and really saying that something must be done. And they have done quite a bit, so it's very good. What they did in the earlier part of this year was define some of these disputed, let's say, transactions, misdirected, malicious, maliciously misdirected and malicious payees. Now, they're all fine, and the reason it was referred to, these definitions are good definitions, and the reason the PSR is looking at is to say, well, what do we do to stop these happening? How do we enable Citizen UK to actually be more confident about using credit transfers. And I'll come on a little later to some of the things that they announced last week. But those are the types. They range from just mistakes, transfer mistakes, through to fraud. But there are a number of things that happen if you make a credit transfer and you go to your bank, at least in this country. Finality of settlement means you don't get your money back. If you want to know the person you erroneously made the payment to, they won't tell you because it's data protection. If you want to, if let's say, I'm just trying to think of other examples. If it's fraudulent, I think the one that does worry me particularly, if it's an on us merchant. The classic example that we hear of was where one of the bank acquirers offered a credit transfer payment to buy from a merchant in their corporate side, which presumably they'd done some vetting on. Turned out to be a fraudulent merchant. People couldn't get their money back, and the bank wouldn't tell them who that merchant was, even though the bank held the money that had been fraudulently transferred to them. So there are lots of issues in amongst all of this, which makes people quite concerned. And when you speak to the ACH silo people, as you probably gather, I don't really feel they've yet got the message about consumer redress. They use these words. If you say, why isn't there any consumer redress? Why aren't you thinking about it? They say, well, you want something low cost and simple. It's been there forever. It's one solution. It works well enough. If we put consumer redress wrappers around the CT, it'll double the costs. We're never going to change finality of settlement because that's at the heart of what we're about with a credit transfer. If you've got a problem, sort it out with your merchant, get them to give you a refund. We can't do refunds. You have to sort it out and get your money back by another means. And other people say, well, look at Europe, we've got MyBank, we've got Ideal, and we've got Swish and lots of other things that are operating quite well. They don't have any trouble, do they? Or do they? Or do they? You wouldn't have said we had any trouble in this country if the PSR hadn't done this recent research, pressurized the banks to give them the figures. And the size and scale of the problems are only now becoming apparent. Now, when you talk to banks, I think, and I speak really here from an acquiring perspective, it seems as though the bankers have never really had to think about the credit transfer in terms of a scheme as we do, sort of card scheme. So it's never been put together in that sense. The direct debit a little more, but not the credit transfer. I think another issue that certainly we've noticed is that the KYC and risk checking processes that banks follow to load up a corporate and onboard and continuously monitor are much lower than the criteria we would use if we were an acquirer. And I think that it's that piece that's missing somewhere, and that's causing quite a lot of these scams. Fraudsters are getting in, they're opening accounts, and then they're enabling payments to be transferred to them and money instantly shipped somewhere else in the world. And I think that refund capability and finality of settlement, it's a very difficult issue for traditional bankers to accept that should change. So there's a lot of these problems are inherent in the way in which bankers operate. But let's just also have a look at the comparison between what we offer, and I speak as a card-centric person. The green blobs tell you, if you look down the side, what do we offer the consumer and what do we offer the merchant? And I think Richard mentioned, obviously we've got chargebacks, refund processes, frauds, refunds, online authorization, online settlement, quite a long list of capabilities. But look down here at the red marks, where with the SCT, the current SCT, the SDD has got a bit more, and SC Instant will deliver some more features. There are some green ones, which is going to be essentially a push payment code. It will be authorized. Online settlement, on both sides. But still a large number of red blobs. There's a big gap when it comes to feature, functionality, and redress when we compare against the card business. Now, I think that in itself, if it was only just the banking community that was relying on the credit transfer, I think that would be fine. But in fact, that isn't so. And as you all well know, we've got a whole fintech industry, quite a few of which are based here in London, all building new methods of payments. Some already exist, but others are being developed all the time. And I think one of the issues that we see is that are the people who are using the credit transfer as a fundamental, embedding it in a new form of payment, and they probably will do so when we get to the API, PIS, AIS world. Are they really aware of what it is they're doing? Now, we reckon that if we, just come to the next slide, if we look around Europe, I'll click all of these really I'll just talk about each one. Nearly all of these use the credit transfer as a fundamental sort of mechanism. There are all sorts of players who are offering all sorts of payment mechanisms, secure buyers and sellers, non-bank anonymous payments like Skrill and PaySafe and some of those, person-to-person, of which you know plenty, secure bank account payments, Ideal and others, low-cost, some low-cost offers, remittance transfer, real-time mobile payments, and payments initiators like Trustly and so forth. All of those people are using credit transfers embedded in their product offering. But we would like to suggest to you, or I'd like to suggest to you, that there's a mistaken belief that the underlying mechanism, the credit transfer, is really fit for purpose. And it gets even worse, particularly when faster market, development of three-party models for these payment systems, lack of consideration about risk and merchant risk sign-up, all of those pieces certainly would make me concerned about the fundamentals or the fundamental components that go to make up a large number of these alternative payments providers. So let's just talk a little bit more as we're getting towards the end. What has the PSR done here in the UK? And I think they're the first ones to grasp the realities of the problems I think we're facing in relation to redress. One of the issues that the PSR has faced is that they've been given a relatively narrow brief. They've been asked to just look at APP scams. So I guess if there was a criticism, it's they should have been given, or perhaps they will be given, a bigger brief to look at the larger scope and scale of the problem. So the current plans are, we've suddenly got some statistics on what's happening, and that means people can, with regular statistics, we can start to plan how to avoid scams, best practice in terms of resolving victims' complaints, so that's going to happen, some data sharing, and more importantly, it looks as though we're going to get a fraud reimbursement mechanism in for these scams, and that's a really big step forward. So all that's very good, but they're fairly limited, these proposals. They don't really go far enough. And I'd suggest that more radical action is needed. So I'm not going to go to each line item on this next slide because there's quite a lot of detail, but I thought of 4 possible ways of improving or how we could approach the problems with the credit transfer redress. And I suppose you could say minimum change, which is do nothing, seems to be the view across most of Europe. When you ask Europeans about this and bankers at meetings, they look around, they say, well, we don't seem to have this really, or they're not aware of it. So I think you'd probably find in mainland Europe, minimum change is the way it's going to be. I asked the ECB whether they would set up a group to have a look at this issue. And when we met them again, I asked them, had they done anything? No, they said they hadn't, and I got a feeling they won't. And they're one of the prime drivers behind the instant payment. I think the second scenario is improvement, and that's really what the PSR is doing. It's beginning to get the banks to improve. But I'd like to put 2 slightly more radical propositions, which are the ones that I think need to be followed. I think the first one is that we should accept that the credit transfer as it is, it's fine for what it does, But if we're going to use it in a retail environment, it needs a new wrapper around it. It needs to be seen as a different method of payment to the traditional credit transfer, and we need to put into it some card-like capabilities. Now, I think that's a fairly radical suggestion. We'll have to see whether anyone around Europe takes that up. Certainly, in some countries, fraud checking and fraud monitoring of credit transfers and direct debits is beginning to take place. They're doing that in France. So we're beginning to see mechanisms to spot scams and spot fraudulent events. So I think we may well see a little bit of that happening in a few European markets. But as yet, no one has really grasped that and said, well, really, we need to turn this into a scheme, and the people who would do that would be the EPC, who drive the SEPA concept. But the fourth one is equally as radical a suggestion, which is that I think the card business has got to get its act together and begin to say, well, wait a minute, why aren't we offering instant card payments? Okay, we're not fully online in that sense, in the fullest sense, and we're not offering merchant settlements, which is within day, intraday. It's a 36-hour process. We might offer some today settlement, but broadly the clearing systems that operate, certainly for Visa and MasterCard, run at 36 hours. And that's equally true of some of the national debit card schemes around Europe. But my suggestion is that what we need to do is to rethink the model, the card model, and to run down the card rails with the card redress wrapper around it, a new product, which we're going to call Instant Card. It's easily said, perhaps not quite so easily done. Some of you will know that that means going single message or a different method, let's say, of handling a card transaction. But it's, and also, if there's a price differential on the instant payment versus our traditional, let's say, credit card particularly, we may well have some problems of eroding it. But better to be in and actually doing something rather than actually seeing it all migrating to the ACH silo. So there we are. I scored these just as I round up. I scored them up not very scientifically actually. Put the credibility. Does it involve regulatory support, feasibility, low cost, low risk, and surprise, surprise, the card one comes out top. Now, I'm card-centric, so allow that. I might have been a little bit biased in that, but actually, I think changing the having a retail credit transfer is probably just as good. But it seems to me that what we do need to stimulate that change is the competition. If the card business gets in and competes, then that's going to be a pushback on the ACH sector to do the same thing. I mean, who knows? We may see that happening anyway. So there we are. Let's just, these are possible things we could do in Europe. I think the regulators haven't grasped the issue. I think we've grasped it in this country, but I don't think the European mainland regulators, the ECB, the Commission, and the EPC have grasped it. The consumer bodies have, and if you talk to some of them, they're worrying and nagging that something is done. The banking associations also outside this country sort of putting it off because it's quite a big change for them to rethink some of the things that they've traditionally done. And I think also in the banking community, doing something voluntarily, they don't want to stop what's happening. It's too much instant payments and PSD2. Oh God, we're going to have to sit back and rethink it all. That isn't what we want. And I think lastly, the card schemes, rumour we have here is that people are beginning to think about this in European debit schemes, that people are beginning to say, yes, this is something we probably have to do if we're going to stay in business. And let's face it, if you're going to lose 20 or 25% of your volume by 2025, you're going to have to do something to keep yourself in play if you're a card scheme operating in Germany or France or wherever it might be. So there we are. That's it. Any questions?
Oh, thank you, Peter.